So I'll just touch on a couple long-term issues and trends, and then we can do some questions. I'm sure you probably have some. I'll go through this pretty quickly. It's just a couple issues to keep in mind, nothing more. So this charts here show the largest economies in the world in 2025 and then in 2050. And that's a very interesting chart. When you look at 2050, look at some of the countries that have emerged now as the largest economies in the world, and some of those that have disappeared. I mean, the United States still going to remain the second largest economy in the world, but a significant bit behind China by that point. India will be about a little bit less than half the size of the US economy by the middle of this century. And then we see a lot of emerging markets like Brazil, Indonesia, Mexico becoming increasingly important players in the global economy, whereas many of the old world economies that I mentioned, countries like Japan, Germany, France, sliding down the ratings as their economies shrink relative to these emerging markets. But what about per capita GDP? This is interesting. This we've done based on our population growth forecast, our long-term economic growth forecast. How wealthy is the world going to be? There typically aren't. That South Korea example I gave, that's an anomaly. There's not that many countries that make such dramatic shifts in wealth. Well, if you look in 10 years' time, the chart looks pretty similar. I mean, it looks pretty similar to what it does today. China catching up to Russia, but still a middle income economy, and the rest of the emerging markets pretty small. But look where China is by the middle of this century. As I mentioned, Chinese wealth levels are almost at Japanese levels. And part of that has to do with the fact that Japanese wealth levels have been falling. I mean, Japan in 1992, when Japan entered its crisis, was significantly wealthier in this measure than the United States, significantly. But 23 years of 1% GDP growth is going to have a big effect on your per capita GDP level. So China becoming increasingly a developed economy. 2050, there will be whole areas of China which are unquestionably developed economies. Certainly in the south, along the Pearl River Delta in Beijing and Shanghai, these areas, they will be large areas with huge numbers of wealthy consumers. That's what Chinese consumers are going to become an ever increasingly important part of the global economy, driving global economic growth. And again, South Korea moved from third world to first world. Who's going to move up to developed status? I mentioned China certainly is in that direction. Malaysia, their goal was to make it by 2020. That was their official government policy. Not quite going to make it there, but by the middle of this century, they'll unquestionably be a developed country. And Poland achieving very high rates of growth, becoming wealthier, certainly will be an unquestioned developed economy by then. Just because you're a developed economy doesn't mean you're always a developed economy. Some of the southern European countries that have been devastated by the financial crisis of the past 7-8 years are headed in the opposite direction. Wealth levels have fallen significantly in these countries, and there's little opportunity for growth in many of these countries. So it's very hard to see how countries like Italy, Greece, Portugal don't fall into the middle income category by the middle of the century. I've done this presentation in front of Italians, and they don't dispute it. They don't like it, but they know that right now with the way things are going in their home country, that the situation is pretty dire. I've already talked about this, the contribution to growth. What's important to remember, China is going to continue to account for a quarter of all the world's economic growth. It is the key driver of growth. It will continue to be a key driver of growth, and that's why paying attention to what's happening in China is so important. And if you're a consumer good exporter and you don't have a big presence in China, you better get one, because that's where a lot of the growth is coming. I won't get into too much in the future flashpoints. The whole world right now we're so interconnected. The whole world is a future flashpoint. But the security situation in the world is deteriorating. There is no doubt about that. And the fact that our unquestioned dominance of the key trade routes of the world, of the seas, is coming into question adds to the instability facing the world in the years ahead. There are so many future flashpoints involving major powers that the level of political risk is going to rise substantially in the years ahead, and how we react to it. Do we become insular? I think a lot of what we're seeing in our politics right now is this insularity. We've always had it. I mean, if you think back to the 1930s, as the onset of World War II, there was a huge number of Americans who were opposed to any involvement outside of our borders. And Franklin Roosevelt, when he ran for election in 1940, lost a lot of the share of the vote he had won in 1932 and 1936 because he was being seen as entangling the U.S. in what was going to happen in the war that was underway in Europe already. And so there is this strain here in America of isolationism, keep to ourselves, and when the world dynamic continues to deteriorate like it is, it's hard to see how that strain doesn't reappear, and I think it is. I think that's a key driver to what's happening in our politics right now. Key long-term threats, I talked about the threat of conflict. Resources remain a huge threat. As I mentioned, 35% of the world's people are living in China and India, which are in China and India, live on 6% of the world's land. And there are other places like Bangladesh and the Indus River Valley in Pakistan and parts of sub-Saharan Africa where there are huge populations or fast-growing populations in areas where there's almost no water, almost no arable land. And how we deal with that going forward is one of the great challenges. As our global population is forecast to get to about 9 billion by the middle of the century. It's slowing down. Fortunately, global population growth is slowing significantly. It's right about 7.3, 7.4 billion right now, but we're still looking at another 1.6 billion people in the world in just 34 years' time. That's a lot of people. That's more than China. That's China and the United States basically entering the world over the next 34 years. And again, how do we, long-term economic growth, where the only possibility, is particularly in the developed world, for growth to be generated is through technological advancements and improvements in productivity. Our demographic situation dictates that growth should be slower. Resources are becoming into question. It's all growth in the developed world and in many emerging markets is increasingly dependent upon productivity increases and technological improvements. And then finally, mass migration. I think we're just seeing the tip of the iceberg. What we've seen in Europe. As I said, we had 250,000 in 2014. Everybody thought that was the peak. We had 1.1 million in 2015. It can't possibly be more. Now we're seeing estimates of up to 4 million. It is just the peak. When you look at that population growth that you've seen in all those regions that don't have resources, they don't have the economic development of other regions, the potential for hundreds and hundreds of millions of people moving en masse from their region is frightening. Frankly, but it's a real possibility. There's some positives. This was pretty bleak today, wasn't it? There are some opportunities. There's a few things. Certainly, the rising income levels in emerging markets, particularly in Asia. Asian consumers are going to be a huge driver of growth in India, China, Indonesia, Vietnam, etc. Huge markets with huge potential for growth. Productivity gains, I mentioned, that's where the growth is going to have to come from. Renewable energy, even though the oil price right now is where it is, this is still, we've seen the climate change deal that was reached in Paris has committed all the countries in the world to invest heavily in this, so whether or not people like it, it's going to continue to grow. Infrastructure development in the emerging world. This is a sector where there's going to be a lot of growth. I've talked about India for a couple of years in this, and we're seeing some progress there now. Africa, Latin America, huge the potential for infrastructure development. These countries and a lot of the governments are increasingly aware that if they want to export, they need to invest heavily in their infrastructure. And I've talked about before the elderly market. This is one market that is growing all around the world. Products and services for the global elderly market, which is growing substantially, will continue to be in increasing demand for the foreseeable future. This isn't Logan's Run. We're not culling people after the age of 30. Was it 35? Was it in Logan's Run? Remember that movie? So it's a huge potential market. So there are opportunities for growth out there. It's not all bleak. Even the Cleveland Browns can win. So there's some opportunities for growth. You need to know where to look. Asia is, of course, the key driver of growth. So the conclusions, we're stuck at between 3 and 3.5% economic growth right now. That is well below previous levels. The US and China will continue to dominate global growth in the 21st century. India will become the number 3 player, but only in the second half of the century. Developed economies are continuing to struggle. The growth ceilings have really fallen in all developed economies, particularly in the old world developed economies. Emerging markets will slowly rebound. Asia will continue to do strong. We'll start to see slow recoveries in other key emerging markets later in this decade. But global political risk levels will continue to rise. They've been rising. If you've been here for 9 years, you know that they've been rising consistently over that period.